Greetings traders, this is Houston Trong from thetradingedge.org, and here is your weekly market outlook for February the 8th to 12th, 2021. And so I'm coming to you this week with a shortened weekly market update. I gave one a couple weeks ago prior to the that final trading week of January, where the markets really began to break down with all the volatility that came from a number of things. So as I had alerted you to the possibility of there was going to be volatility that last trading week of the month. There was, of course, the busy econ calendar. There was the earnings announcements, and as well as the bump in activity around those Reddit / Robinhood stocks that people were watching, and the markets really pulled back pretty sharply that final trading week of January, and the markets had seen its worst trading week since October. Now fast forward a week, and the markets have now rebounded from that pullback and has now had its best trading week since November of last year. So you'll see as we move into the charts, and I've kind of brought this up in the past, that rallies, and now this is what I'm calling the video, rallies are really built on the backs of broken trades. So I'll say it again. Rallies are built on the back of broken trades, or for that matter, on the back of broken traders. And so the fact that we got the rally this week is based on the fact that we had a sell-off last week. And you'll see that in the charts later on. So before we get into the charts, just a couple of quick things. Again, I'm not posting these videos regularly, but I do want to give a quick update to what we talked about a couple weeks ago. And for the coming week, we do have a fairly light econ calendar, but we do have a busy earnings calendar. Not going to get into all the earnings and the calendar, so you can refer that on your own. But definitely take a look at those earnings events to make sure you're not carrying stocks into earnings unexpectedly. Very important thing that I always point out. That I always want to reiterate, because that's a really easy way to lose a lot of money is being long something and or short something and not going to earnings and not realizing it. That's a good way to lose a lot of money really quickly. So with that out of the way, let's get into the charts now, do a bit of explanation around what I just talked about earlier. We'll jump to our favorite chart as we always do. First we'll jump to our Vix chart. I'll kind of explain the bigger picture, and then we'll zoom into some of these lower time frame charts. And my goal is to try to keep this video to between about 20 to 30 minutes at most. So the Vix chart, big picture. I'm just going to pause it for a second. I'm just going to clean up my chart for a second before I continue. Okay, to this Vix chart. So what I had to do there is I had to remove some moving averages and some Bollinger Bands on the VXX chart, because when you put those two in, it really skews the data, and it's impossible to see on a higher time frame chart. This is what I want to show, and it's playing out very slowly, but it's doing so. You can see here now that the VIX has been playing throughout this pattern, and it's been going on for several quarters now, but it's very slow, but it's working. So it's the outside, inside, and down on the quarterly chart. And it's still doing its thing, right? So we had that break outside, inside, and down, and ultimately it looks like we're going to go there, 1615. Now right around here, the 1630 area, we've tapped that area numerous times, and that's been acting as support. So the question is, and we're getting close once again, will the VIX pop up again if we tag that area? That's been acting as a pretty decent level so far. The question is, ultimately, will we break through there? And then if it does, will that area then begin to act as resistance? So the quarterly chart, that's an outside, inside, and down. And now we have an outside, inside, but we still have a lot of month left. So this bar is not closed. It's still outside, inside on the month. But the VIX has been slowly melting. We had that pop last week because of the increase in volatility, and I believe to be the fact that a lot of people basically got their hedges blown out because of all of the Robinhood stocks that were getting squeezed, Robinhood / Reddit stocks that were getting squeezed. But now, as we can see, this past week we had basically a give back of everything that transpired the week before. I think we saw the increased put buying in the late last week of January. We saw that here, the VIX popping up, but now we've got this inside, outside, inside now. And how is this thing going to break? All right, so if we go outside, inside, and down, we know that to be a very powerful signal to the downside. And then once again, there's that 1630 area right around here, right there. We're getting very close to that. We closed at 1641. Will that area hold, or will it finally break through and then make its way ultimately to that 1315 area, which is that outside bar low on that quarterly chart that I showed just a few moments ago? So that's ultimately the big roadmap there. The question is, how do you get there? And this is going to be the way it's going to get paved. Does it break down through here first? And if it does, can it come ripping through here again and stay below this area? This area's popped, so if it's popped before from this area, so this is what you want to watch carefully when you get down to the daily chart now. All right, that's 16. You can just see that area there. I'll just draw it in with a small tool here. It's this area right here, this 1630 area, this little box area here. So this level has held pretty consistently up to date for the past several months. So let me just move my drawing to here, so you can see since the beginning of December. Right, we tagged that area. We have not been able to break down there. So it's been over 2 months now of tagging this. So 1, 2, 3, 4, multiple tags. Right now we're in there again. Can it break through now at this point? Let's wait and see. This week should be interesting to see. So the VIX is trading full time frame alignment to the downside. It's very hard to be long this thing now until it starts to break above. And even if you're long it, it's just for short rides, because the time frame alignment's not in your favor, and there's nothing telling you right now that it's going to break any higher and stay higher. So the game plan, as has been for as long as I can remember now, has been to fade the VIX anytime it pops up, and that game plan has worked out pretty effectively. So now we had this past week, this was a momo up last week, right? Going into the end of January. So remember that momo up sequence? Momo up. Once it broke below there, right? It was a momo up reversal short, right back to the downside again. And that low, this bar's low right there, we expect that to get taken out. The low there is 1605, right? So that's expected to get taken out. On the daily chart, it was same sequence, right? But on a slightly lower granularity, you got the inside bar reversal. Inside bar up, beginning of February right here, it breaks right below there, right? Inside bar up, inside bar reversal back to the downside again, and there's your sequence. Very simple stuff on the VIX, but very effective. So now onto the SPY. So this is what I was talking about before, is that the rallies are built upon the backs of broken trades and traders. Well, first off, let's just go to the big picture. On the 3-month chart, the SPY, the Qs, the Russell, the Dow, they've been doing their thing for the past 4 quarters now, right? So this is a single quarter. Each bar is a single quarter. Outside, inside, up. So 3 consecutive higher highs now. 3 consecutive quarters where you've had higher highs. SPY just doing its thing. There's no reason to believe it's gonna go down at this point. We still have a lot of momentum to the upside. And now we got that on the charts as well. We had that outside bar and up. So that's momentum now, fresh momentum, starting off again on SPY. We got the same thing on the Qs and the Russell. So how far this moment will take us, we just got to sit back and wait and see, right? Because right now you don't get an extinguishing of that momentum until you take out that low right there. So until that low gets taken out, there's no need to try to take that short and try to catch the top, because if you catch it, they may just buy it again, and it's going to be a very fast short. The shorts have not been going very far and not too effective as of late, actually for a long period. So last, a couple weeks ago, I mentioned this is the issue. If you get a situation where you have an inside bar reversal to the downside, we had that here, right? That outside bar, the last week of January, this could have gone south very quickly. So the market sort of dodged a bullet here when this bar closed outside bar. So when it closed at the end of January, it looked like that. It looked a bit dangerous. The reason why it was dangerous is because had the next week, this past week, had you broken below that low, then that would have immediately been the next pivot right here. This bar's low here would be the next pivot. That low, if you look on the monthly chart, is actually the prior month's low. So if we don't see this month right now, February, and we saw just January, had February come in and taken out that low, this would have put this sequence in play. The fact is that we know the buyer stepped up. All those Robinhood traders and trades, they got busted. Their hedges, those folks who were hedged, they were able to put their hedges back on again. People were less worried about, maybe a little bit less worried about the volatility that was going on in those parts of the market. And the market started to operate more efficiently again, and people started to buy stock again. So and the other names, and so that buoys the markets back up again, and we basically erase the chance for this low to get taken out for the time being. Right now, the markets could certainly come back down here again and take out that low, but that's a lot of effort now, because now when you opened up here, it wasn't that far to get down to there, but now the markets are up. Well, the SPY's up close to 5% already for February. There's a lot that has to happen to come back through here and to go down there to take it out. You have to have, you know, a 6% plus a pullback to take out that low. So not impossible, but not probable either. So, you know, this at this point now, the buyers are certainly in control. As we saw, the momentum has just picked up. So now with that momentum in play on the weekly chart, we've got a momo up situation now. The question is, how far does momo go? And that's the direction you want to be biased to the upside, because pretty much all these charts look like this, right? So when you have this kind of pullback, was momo down going into the end of January. See that momo down, down. But as soon as that happens, beginning of February, take out that pivot high. They're immediately going after that high there. That's what happened on Friday. That high, boom. Right there on Friday. Actually, did it take it out on Thursday? The high is 385.85, 386.24. So they did on Thursday, and Friday was a little bit of a cherry on the cake to basically take out, you know, any remaining shorts who had their stops anywhere in here, thinking that was going to be the pivot high for the SPY. It was not. They kept it going, stopped out any shorts, and that's sort of a momentum hammer. Even though it's red, the buyers closed it on the upper end of that range on Friday. So strengthen the SPY. And also strengthen the Qs. No question here, the Qs is even stronger than the SPY, because if you look at the quarterly chart for a quick second, it's momo up on pretty much every single time frame that is higher. So you have momo up here on the Qs. So 1, 2, 3, 4 consecutive quarters now of higher highs. You got momo up on the monthly chart, 3 consecutive months. Momo up, up, up. See that on for January. Closes a doji, but that's now distant memory. It's because now we're up 5.34% for the month of February. Again, to cause a larger reversal, you got to take out that low. So you have to come all the way back to the range again. Again, not saying it's impossible, but by this point, it'd be difficult given the current narratives that are currently in play for that to happen. We're going to see that change in the market, I guess, narrative a lot earlier than well, the price action is going to have to really swing around, and the narrative is going to have to swing around quite dramatically, and you're going to catch that way before, you know, this low gets taken out. So, you know, right now, momo to the upside. Weekly chart, momo up as well. So momo up in the quarter, momo up in the month, momo up in the week. You know, you wonder why things are so strong. Well, it's because, you know, the charts are telling you, right? It's all momentum up, momo up now on the weekly as well. So, you know, at this point here, just keep, you know, watching those prior week lows and see how long this momentum takes things, so how far it takes things, because it can go pretty far, as we know. Same thing on the 2-day chart. Basically, there's a momo down reversal in February, right? So here, end of January, boom, February, and they took out that pivot high right there, creating a higher high. And now anyone who had their stops up here stopped out. We're back at all-time highs in the Qs. So momo up on the week. Let's see how far things go now. So let's talk about the Dow for a second. The Dow has a nice little picture here going for us. Interesting little lesson there. So the Dow, you know, we have a very strong several months so far. Basically 1, 2, 3, 3 months of higher highs, and then currently an inside month in the Dow. And on the weekly chart, this is a very nice chart, because here it went momo up. If you recall, you know, going into that last video I had posted 2 weeks ago, it was momo up on the down. The question was, if you take out that low, it's going to basically extinguish the momentum. And what happens when you take out the momentum is going to come back through the range. The range as being defined by this outside bar. Okay, so there's your outside bar. And so when I went momo extinguishing on to the downside, so it's a momo down reversal signal to the downside, the pivot's gonna be this bar's low. So what's the low of this bar? 298.74. Okay, that was 298.74. This low right here, 298.59. So they did just enough to take out that pivot low. Now, why do we know it does? Why do we think it's going to do that? And why does it happen so often? Because that's an outside bar. An outside bar is basically, as I've explained in many videos, is a fractal Browning formation. Okay, so basically we expect, when it's a Browning formation, we expect there to be higher highs and lower lows. And so we expect this low to probably be below that low. It's going to overshoot and take out anyone who has their stops below there. So what happens, how you would draw this and see the broadening formation is this. So now they have a lower low, right? That's what you expect to see. You can draw this line as so. That low is lower than that low. Guess what? It's now going to go out and take out the other highs, because now you expect a higher high. Okay, so if it comes back through the other end, take a look at that. This high here, this week's high, 312.55 is higher than that. 311.98 and higher than that. Actually not higher than that one yet. So getting close. So we draw our fractal formation like this. From that pivot high, that high, we can expect at least this high to get taken out. 312.71 becomes a very, very high likelihood. It comes out the other side. It takes out this pivot, coming very close on this past week. Okay, so there's your broad information on the weekly time frame. And so on the daily, look something like this. Right? So if you didn't, this is what tricks people most of the time, is they don't understand the way that that these broad informations work. In real time, they see it after the fact, but they don't realize that that's the scenario being played into, and so they'll often put their pivots or their stops under linear support. So if you draw linear lines and you're like, okay, well, I'm going to draw a straight line here and hope not to get stopped out below that low. That's exactly where it's going to go, below this bar's low. That's also an outside bar, right? Not a coincidence. There's your outside sequence here, outside bar sequence on the weekly, higher highs, and then you get a lower low, lower than that low. Then back up again, expect to get this high taken out once again, 312.71. So very nice broad information on the Dow there. And now again, it's not momo up, but certainly we expect there to be at least a little more upside, given the fact that broad information is not complete yet. All right, so that's going on Russell. Russell being one of the stronger ones as well. Russell now, man, it's had how many months in a row now has it been going up? I think it's 5. 1, 2, 3, 4, 5 consecutive months of higher highs after doing a lower low here. So very strong on the Russell, and we have momo up on the Russell as well. So that's momo up on the Russell, as well as the Qs, as well as the SPY. So buyers pretty much in control here now until the momo gets extinguished. So somehow the sellers, if they really want to damage the buyers and hurt the charts, they'd have to break it down through here and take out that low. Okay, now let's go on to emerging markets. Emerging markets here, just blasting into highs, inside bar so far in the month, but you're going right into those highs here now, getting close to those all-time highs put in back in 07. Not quite there yet. 55.83. Let's see here, 55.83. Yeah, we're not quite. Oh yeah, we are past there. So we did blow through there. So now we are basically trading at all-time highs, above all-time highs on the emerging markets, and we have a potential for even more gains here, because now we've got that outside inside. On the weekly chart, we break above there, we're going to have that continuation move with some strong momentum possibly there. Bonds, very favorable here, because bonds are basically just going down. So bonds going down, so the prices of bonds are going down, and very supportive of, as I've been saying in the past, for financials. So financial stocks have been doing quite well, and there's no reason to believe that bonds will not go down even further. We have a bigger picture here. Here's the 3-month chart. We got an inside bar reversal. So inside bar and up, right, on the on TLT. So it goes down here, and there's your inside bar reversal, and it's going steadily down since, potentially going back down through here, down to this level. Monthly chart, we do have the inside bar and down for 2 consecutive months now. So inside bar down. That's good strength to the downside. The weekly chart, we just did a inside bar reversal to the short side. No reason to believe it might pop slightly every now and then, because you're at the bottom end of that range of the Bollinger Bands. May pop up again, but then that's another opportunity short again. Bonds looking like it has a lot of headwinds, and the trend just clearly now is to the downside on the bond side. So yeah, financials can continue to be a place that could be interesting as bond prices go down. So there's your TLT chart. On the 2-day chart, you got the also the momentum to the downside, momo down on the 2-day, momo down, just going right in the lows. This is getting quite steep now, so yeah, would not be surprised to see it bounce up a bit again, but again, that likely will be met with some selling, at least for the sort of foreseeable future. So there's your TLT. Now let's go to gold, and then we'll talk Bitcoin, and then we'll wrap things up. Keep this video nice and short this week. our gold futures, the gold is it's actually having a hard time here and potentially breaking down. This is a little surprising because you've had a really good uptrend here on gold for a number of quarters, right? We're actually momo up on gold, as we've been saying since here. Momo up, up. But in here now, we actually have a red quarter and we're getting very close to breaking this inside bar to the downside. We break that to the downside, that extinguishes the momentum since we've had since here, July 2019. Right, so this has been nearly 2 years of momentum to the upside on gold, but it could be coming to an end here if we break below that 1767.30 cent level, and we're getting close. We're at 1813, and we've seen more weakness in gold, although it did pop on Friday. So the buyers certainly have to begin to defend here as we're getting closer to extinguishing that momentum. So watch that level very closely on the monthly chart. We got that inside bar reversal short. Okay, so here you go, inside bar up in January. February reversed it. So it is kind of strange for gold. You know, gold could be signaling here that this could be the end of the move, because it's not expected, right? You'd expect with the Fed and the U.S. government continuing to advance these monetary policies that are very loose, to continue to give out aid packages and stimulus packages. You'd wonder, like, you know, where the money's coming from. You expect that they'd have to be running that printing press significantly. So why isn't gold rallying? So the gold should be rallying on that news. The fact is that it isn't, and so that's definitely a red flag there. So you need to be paying attention to the charts, because the charts should be going up, but they're not. So that's important. You don't want your narrative to outplay you know, what the price action is telling you, right? So price in the end is what rules the day, and the price is telling you something's not right. Especially go inside by reversal. This thing doesn't pop up here. It's going to come up there and then test that level there. That level there is that's the 1767.30 cent level that we just talked about, right? And it's looking very likely now that we come out and take out that pivot. In order for this to get fixed, it'd have to do something like this. It'd have to go inside bar, up and down. So that's the inside bar reversal. Now this month of February, best case scenario for the bulls, it turns into an outside bar to the upside. It goes completely green and close out here. That's very difficult, right? Since you're already down here. Not saying it's impossible, but that's what would be the best case scenario. I don't think it's a very high likelihood it's going to happen, but maybe if you're, the bullish case is that somehow it closes somewhere in here like this, maybe even a red bar, even a slightly green bar, but it closes somewhere in here, and then next month you get a bar that goes up, right? So you get an up bar above the prior month's high, above February's high, and then you can repair the damage that was done here. But until that happens, until you get a higher high, so this, you know, the next month, until you get a higher high in March, this is potentially threatening to go out down through its pivot. Okay, so right now the bias is to the downside on gold. Well, it depends on your time frame, but so certainly for swing trades, you have the bias against you, to the downside, because you have a red quarter. It's a red month, right? And so once the weeks turn red, the easy trade is to the downside, right? So, and then that pivot's right there, that 1767.30 cent level one. Also on the weekly chart, we got that momo up reversal to the downside, right? So momo up last week cannot cut through these downward facing or these kind of trending down moving averages. We get the new month, doesn't help things. We still got the monthly quarter, the red quarter right here, the quarterly level, and it goes momo up reversal short, takes out that pivot low there, causes the inside bar reversal on the monthly, and now I got to do a little more here to take out that quarterly level right there. So watch out gold. Gold ends the week not strong, all right? So even though it was a green bar, it's still an inside bar. We are definitely overextended to the downside here because you're deep in the Bollinger Bands. So you could definitely get a pop back up into here again, but would not be surprised whatsoever to see sellers push it back down through there again. We need to see a lot done here for gold to recover. Namely, we got to get back up above here, turn that month green somehow. Has to get way up back up to 1860 area before we get that monthly green again. Otherwise, yeah, watch out the bias to the downside. Now, digital gold is definitely, aka Bitcoin, is faring a lot better. So, is Bitcoin in some way, is it now being viewed as an alternative gold? Time will tell, but the crypto charts, the Bitcoin charts, are very, very strong. Really big picture here. We got that inside year and up last year, right? And it's still going. Look, this is a 12-month chart. I'll turn off that logarithm chart. Look, it's double inside, up, up. So that thing is gangbusters to the upside. How far does it go? It tagged 41,969 a couple weeks ago, and it's, you know, still hanging strong. Bitcoin is up about 6% today, around 5% today. On the quarterly chart, remember it did that outside inside, and it's still going up. Outside inside, up, up. Big bars here. On the monthly chart, we still got an inside month, but it's the beginning of February. We got a lot of month left. Let's see where it goes from here. But the path of least resistance now, it certainly appears to be up for the Bitcoin charts, because it did a nice little pullback. It stopped out some longs who were weaker, and maybe got some shorts trapped as well. I myself got short Bitcoin on my trading accounts, and I stopped myself out as last week in this bar here. I stopped myself out because the narrative changed, right? People got back into Bitcoin, and this ended up just being a decent pullback, right? So pullback right into these moving averages. So you can clearly see the trend is up here, and they bought it back. Now we're getting back to these levels once again, back up to 41,969. So on the Bitcoin chart, here's a nice little break to the upside on Bitcoin today, up 4.6% right now as I record things on a Saturday. Inside bar up, right? So the prior week's range is right here, right? So right there was the prior week's range. So that purple line, it based it right there above, right below the prior week's high. Goes inside bar up, taking it to making it a weekly up bar on the weekly chart. So Bitcoin for now, again, doing pretty. It would have to, in order for this pattern to break, you'd have to come back down here and take out that bar's low. That would be a little difficult given you're already up 20% for the week, although the week's nearly over. One day left. But next week, going into the week of February the 8th, you'd have to somehow come back down here again and take out that low. All right, so that's the work that's required for the sellers to break down these charts. That's how we frame things up, right? Like what would be required for the current chart to break, the chart pattern to break, and that's what would be required for reversal to happen. You have to see that low taken out. The buyers are in control right now. It means the onus is on the sellers to do all that heavy lifting in order for that to happen. All right. So there's your update for those markets. I hope you find that useful. As always, if you have any questions, feel free to drop me a line in the comment section on YouTube, or head over to the blog at thetradingedge.org and drop me a line there. Always happy to hear from you. And once again, continue to trade safe. The markets the volatility is coming in, but we still have some very big moves intraday on a number of names. So trade safe. That means understand the risks that you're putting into the market, and do the best to trade well, right? It's not, if you master your method, master your process, then each day shouldn't be about how much money you're trying to make. It's about simply following your method, following your process. In the end, that is what's going to cause the gains to appear in your account over time. That's a wrap for me. Hope to talk to you again in a couple of weeks, if not sooner. Have a good trading week and happy trading. All the best.